Welcome back, you guys. Today we're going over another item on my investment checklist, and today we're going over a very underrated metric, and that's the enterprise value to EBITDA ratio, which could possibly be the best ratio for finding awesome companies that are currently undervalued. In this video, you will see how a portfolio of S&P 500 stocks with the lowest enterprise value to EBITDA ratio more than quadrupled the total rate of return of the S&P 500 over a 20-year time period. So this is not a fad that is here today and gone tomorrow. It's here to stay. So let's get into it. Enterprise value is the total value of a company. It's basically the market cap plus all debt minus cash and cash equivalents. EBITDA is the earnings before interest, taxes, depreciation, and amortization. Sounds like a mouthful, but it's basically the earnings that are available to all shareholders. Similar to the price to earnings ratio, a lower current enterprise value to EBITDA ratio compared to historical levels represents a cheaper valuation, all else being equal. This is ideal for analysts and potential investors who are looking to compare similar companies within the same industry to see how cheap or expensive a stock's valuation may be. And this ratio can be found on Yahoo Finance, which I'm going to show to you in just a second. So if you've been following me or if you've taken our courses, you'll know that we've been talking about price to earnings ratio at length. And this is definitely one of those widely used valuation metrics used by investors. And the reason why it's so widely used is because it's simple. I always look at PE because it's simple and effective, but the PE ratio does have some flaws. Mainly, it doesn't account for any debt. It's mostly an equity-based metric. If you want to use a metric that looks at the total valuation, enterprise value to EBITDA is the metric that we should be looking at. Sounds a little bit more complicated, but fortunately for us, we don't have to do the legwork to calculate the formula because we can find it real easy on Yahoo Finance. All right, so right now we're taking a look at CVS. And when you enter the ticker symbol of a company on Yahoo Finance, it will bring you to the summary page, which will show you all this data right here. What we want to do is come up here to where it says statistics. So you click on that. And here it is right here, enterprise value to EBITDA, it's 9.3. So this is how you find it if there's any specific company you want to take a look at. But if you want to do a search for companies that have low enterprise value to EBITDA ratios, another thing that we can do is come right here to where it says screeners, click on the equity screener. And when we do that, it defaults to the United States, and all of these market caps are included unless you want to exclude some. But I'll do that in a minute. What I want to take a look at is a price intraday. I want to look at stocks that have a price greater than 20 because I want to weed out all the penny stocks. Then I'm going to add another filter. Two more filters I want. The first one is average volume. We're going to select that in a minute, and then we're going to come down here to where it says valuation measures. And we want to click on total enterprise value, also known as just enterprise value, to EBITDA. So those are the things that we want to search for. We're looking for stocks that are $20 and higher. We don't want penny stocks. We want to make sure the stock has plenty of liquidity. We're looking for stocks that have at least 500,000 shares traded every day. And then the total enterprise value, we want this to be, let's see, move this up a little bit. I want this to be in a range. So between 0 and 10. And when we do that, that's going to give us approximately 236 stocks that fit that criteria. There's 236 stocks that have enterprise value to EBITDA ratios below 10 that have at least 500,000 shares traded every day, and the price of the stock is 20 or higher. So let's find some stocks here. And you'll see a couple here that you're probably very familiar with. Berkshire Hathaway is Warren Buffett's company, Intel, Verizon, and then a couple of the stocks that we researched during our weekly Trade Room Live calls right here, CVS and Altria. So once again, you want to find that specific enterprise value to EBITDA ratio, just click on the ticker symbol, come back over here, go from summary to statistics, and there you have it right down here on the left under valuation measures, enterprise value to EBITDA. Just like price earnings ratio and the other ratios that we've taught so far, the lower the ratio, the better, and we want this one to be under 10. If it's under 10, this is considered a healthy valuation by analysts. The enterprise value to EBITDA ratio could be the single best valuation metric around. Bloomberg did a study on companies within the S&P 500 index that had enterprise value to EBITDA ratios ranking in the lowest 10%, and it put those companies into its own index weighted the same way as the S&P. And look at this chart right here to see what happens when you invest in just these companies with low enterprise value to EBITDA ratios. The performance of those stocks absolutely crushed the performance of the total S&P 500 index. It more than quadrupled the rate of return over a 20-year time period. Everything that's in my investment checklist is important, but I think that this ratio right here is one of the most powerful tools that is in there. Thanks for watching this video. Do me a favor, leave a comment below. If you have any questions about this or any other topic, I'd be happy to answer any of your questions. Also, don't forget to hit the subscribe button below and turn on notifications so you don't miss any of our new videos. If you'd like to learn more about the stock market but don't know where to begin, click the link below this video to schedule a call with me, and I'd be happy to point you in the right direction. So thanks for watching this video, you guys, and I'll see you in the next one. Take care, everyone.